There you go.
Got it?
There we go.
Yep.
We got it.
Okay. All right, so it's a good Saturday because, well, first of all, we're in February, right? So what was I talking about? What's going to happen in February?
A little downtrend.
Yeah, that we'll have some give back. It'll just be a matter of degrees. I agree with Scott's level in gold. Maybe that's all it pulls back to, Scott. I had done a little research today, and a lot of people talking about that 1280 area in gold. But Friday was an important day, okay, because there was no follow through from the Fed. The dollar should have gotten smashed. It held on a closing basis 78.6. You just have to be long the dollar, okay? Because with everything that happened last week, where the dollar held was pretty significant, right? You have your 200 day that it held.
Yep.
Okay, we didn't turn up on the weekly. But it's not going to take much for an off number, which will come in around, I think, here it is, 580, which coincidentally is a moving average here at 580, and 96 being, an important pivot. Once it took it out, see how it accelerated, rallied back to 96 and sold off. So 96 is important. This line is important. So Sunday night, just buy the dollar and hope you're early. Okay, so, because we really do have very defined risk. The defined risk is here at 510. It's not a big risk, even if you pay up 10, 15 pips, or, maybe it'll come in a little lower. But it's a type of thing where you get long and you hope you're early. You guys understand what I'm saying? Then, sometimes when a high conviction trade is out there, and you just try and get too precise and try and be too perfect on an entry, you can miss the boat. So why not just get long? Okay, because
like natural gas.
Yeah, well, yeah. Sometimes you try and I'll buy a pullback, and I'll wait for a fib. I don't think you wait for anything here now. Okay, you just buy the dollar,
Got
you
it.
sell the euro, you sell the Aussie. The dollar's going higher. It's my highest conviction trade. Of course, we start taking out last week's lows here. Then we'll take these out, and the bull case is dead. But what I like about it is that the psychology, the Fed's on pause. Dollar should get killed. It should have really followed through here, and it's not following through. Okay, so the dollar is the linchpin. I think at least during part of the dollar rally, that's going to create the pullback in gold. But if you notice what happened Friday, if you want to play the short side of the metals, I wouldn't short the gold. I'd rather be short the silver. And it's not just a gut feeling. It's based upon price action. So see how much weaker silver was on the pullback than gold. All right. So, and also silver is more economically sensitive. So now that I'm not looking for new lows in the S&Ps to be retested right now, all I'm looking for is maybe a 50% retracement of this recovery. Silver will be under more pressure because it's more sensitive to the economy than gold is. Gold, is about destruction. Silver, eventually becomes, an important precious metal. And I'm not saying it can't go to 17, and if 1280 holds, that gold can't go to 1400. I'm just talking about now. I actually think the dollar is going to be a longer lasting trend into the summer, fall, something like that. Over a par. Okay, I'm looking for over par in the dollar. And what's going to be interesting is to see which markets hold up the best under the pressure of the dollar. You guys with me on this?
Yeah.
Okay, because, the dollar was sideways to lower during this whole January time frame. It's really gone nowhere. And that may be because it's just been a huge consolidation before a big move to the upside. So, gold, here's Scott's 1280 level. You know, there's a lot here. I was thinking 1292. But gold pops to 1330 this time, there will be divergence. So even though gold could go to 1400, I do believe we're going to enter a pullback phase. Whether or not there's one more shot up to create like this three driver here. 1, 2, and I was talking 1330. I mean, that could still happen. Something happens over the weekend. But it's looking less likely. But, you know, I may try it up there, but my bet is even if gold does that and makes a new high, that silver will have a hard time getting through, you know, this high. They might challenge this high, but not take out this high. So silver's going to be weaker. You know, I think we could pull back to 1550, you know, 1540. That certainly would not change the bullets picture. I have some convergence here at 1520. So to me, that's a reasonable target. I think it's a better short than gold. But I think the dollar is a better long and the euro's a better short than gold. And even Aussie's a better short than gold. Dollar. So I'm looking for the dollar to create the pullback in the metals, right? And just to give you an idea of the potential of the euro trade, is this line is back in play in my mind now. I think it's a weekly. And I've had it drawn forever. This is where I think we're going in euro. Sometime, summer, something like that. I think this would probably be equivalent to over par in the Dixie. Maybe that's 102. So anyway, this is my target. It's pretty easy. We've had two tails. You know, your risk is either over this week's high at 1514, right? Or the high of the move, which was 1570, which I talked about on face, and I only made about 17 pips on this sale. Made some money on this sale and this was one. Got short from 95 and got out in the 70s and it went here. And I didn't short the Euro Friday, bought the dollar index instead and then tried a few of the crosses. So my attitude on the crosses with the yen now, I've reassessed. I don't want to be short yen crosses right now. They might pull back with a correction in the stock market, and since I brought it up, let's go to the S&Ps. So the S&Ps, have they topped? The first sign would be back under, this 2695 level. I'd like to see one more high. Look at how we're diverging on the. This was a confirmed high, and we started diverging here, and on this high right here, we didn't even get close to 70. So 27.15 to 25, I think, is a short. The Nasdaq's acting weaker. It may not even take out these highs. I thought, maybe we'd get to 61.8, which we missed, 69.85, but it may not even get there. And in the S&Ps, I think it's viable in, a corrective fashion, a lot of different ways for us to, work our way back towards the halfway mark, This was an important breakout. This stay right here, 25.20. So, and then we get another launch towards 2,800 or better. So, this is also going to be, I think, part of the dollar. Okay, it's going to be part of the dollar pressure. Oil, I took a stab at. I'm going through this pretty fast, so I'll open it for a question. Basically, I'm looking to be short the board. And let's look at the oil. Oil, tried the 3 drive, came off once, twice. But it didn't close lower. So, we might even be setting up a 3 for the third. Here's 1. Here's
Did you
2.
see it was 72% short on Brent Friday?
Huh.
You mean commitment of traders?
Correct.
Okay. Okay, so there's a lot of bears still to be taken out. Is that what you're saying?
Yeah, Chai thought it was extreme for where
Okay.
we were.
Okay. So then then maybe we get a blow off, or an acceleration through the wedge line, but I don't see much more than 58. Okay, and it could be, with
Got
some
it.
of the geo stuff. But I'm not going to start getting long up here. I'm looking for reasons to get short. So if we've seen this before on 3 drive lines where it gets above it and there's an acceleration phase, and then what do? First of all, draw this line in. Okay. Then if it gets above the line, you let it do whatever it's going to do, and then back inside the formation, back inside this wedge line is your signal. So if you're not going to try and top pick it, you wait for it to negate a throw over. So we're either topping up here, and I've been talking 5.5 for a while, and we almost got there, and Paul sent me a chart, and I caught a little bit of this on Friday, pretty close to I think it was this candle, made 28 and then 45, and it was good for almost 70. But the way it came back tells me there's another push, and the RSI isn't as bearish in the crude as it is in the S&P. Okay, but we're not confirming up here. See that? Here's your last confirmed high on the 4 hour. It's all the way back at the beginning of the month. So we've been diverging all the way up, and kind of has a wedge feel to me, Scott. So good. Let them clean out the shorts, and let's look for technical reasons to get short crude, because whether the top is here or at 58, I still think there's a very good chance for a pullback, back towards 50, 48, something like that. Okay. So
Perfect.
I think there's going to be a nice pullback, whether it's starting here or there's one more squeeze on the shorts that Shai mentioned. Okay, and she's that's all she looks at. So she knows everything that's happening there, fundamentally, technically. So we'll see. But to me, it looks ripe for a pullback. Remember, it's been pretty tied to the hip with the S&Ps, right? Not as strong though, but pretty much, this has had much more relative strength in the crude. So anyway, I'm looking for shorts in the crude.
And we also had 80 billion come in with the yuan again from China.
That's
More cash
enough.
in.
Okay, well, that's the gold topped on the yuan, so we'll see what the yuan bottom. Right, look at this. I don't know if it had what kind of week it had, but see this candle? And it was pretty tough to say, I know some people had 670 targets in the yuan, right? But that was certainly not an easy close to buy before the big up day. I mean,
And what I thought was funny too is Rickards picked it to the SDRs, said it was 970 peg on the SDRs. I'm not sure do you know how you would follow that? So he's doing a correlation to these gold highs now with SDRs. Are you aware of that at all?
No. He's, he's like he's an ex-CIA guy. So I interviewed Jim once. He's very brilliant. Okay, his market calls, I don't know. I mean, he's been, has written articles of how the ATMs have been shut down 2 years ago, and we were going to have a crash a long time ago. But he is a brilliant guy. So if he's following it, there's a reason, probably a very good reason. But I respect him. But sometimes you have, like with everyone, you have to take their forecast with a grain of salt, because he's kind of apocalyptic, don't you think?
Yeah, no, I agree with that. I was looking more for the corration. If gold's going to follow SDRs, and I was trying to figure out how to do that.
Well, I think if you just can predict the yuan, that it's a pretty good tool. So as long as the yuan's heading up, so I mean, this is going to be the key, right? Unless its correlation breaks down eventually too. But when I look at this, I think at least back to here, 685, right? Support, big moving average on the daily, the 50. Look at the weekly for a little more perspective. Correct this recent decline anyway. Maybe there'll be. Well, there is no deal. We still haven't worked it out. We're still optimistic, but the trade war fears come in again. Okay, and if that happens, the yuan, the Chinese are going to, let their currency weaken. So they control this pretty much, right? They control their currency. I don't know if market forces do or not, but they brought it down in hopes that okay, we'll stop, debasing so that we can export, right? So they're negotiating, they pull it back. If the negotiations break down or there's fear of it, the yuan's going to rally. To me, that's the way it looks. And whether it's a failing rally or it blows a new high, I think is going to be the key for gold. So SDRs, I have no idea where to follow them. I follow so much stuff right now, Scott. I'm looking at so many things that lately I find myself with, I know I'm the intelligence gatherer, but almost information overload. You guys know what I mean? And I think it distracts me. And if sometimes I don't have confidence, I'm taking heat in the market and I see another opinion of someone I respect. It shakes me out of things. I just want to be a little bit more reliant on what I see. I'll read the stuff and everything, but the important thing is, what do I see? I have enough tools to make these decisions, and it's nice to know, counts that perhaps I don't do that kind of work, or when windows of time are, could be a turning point. But for the most part, I just can't absorb all the information that comes at me every week, every day. I'm not saying you guys, keep it coming. I'm just saying that I follow enough for my stage, my stage in life.
Hey, your conviction in the dollar is good enough for me.
Yeah, I mean, that's all you need, right? I mean, if we're going to 102 in the dollar, there's a lot of money to be made. Right. So, I mean, I don't have to know where everything else is going. I mean, the major theme is, I think, January was a banner month for everything. And the dollar's going to start a, pretty good bull market move. And I don't have to know how much these other markets are going to be affected. But I think the primary thing that I have going into next week is a bullish dollar stance, and you can pick your poison. And just like on the way up in January, not everything performed as well. Some outperformed, some were laggards, some were leaders. The same is going to be true on this give back in February. Right now I suspect gold's going to hold up the best. Hold up better than the market, especially we've got a 50% retrace. I think possibly hold up better than the crude oil, because that's pretty economically sensitive, and it's due anyway. I mean, it's been a nice wave from 42 to 55, 56. So $14. Why can't it pull back 5 or even halfway? That 5 would be 38%. So the yuan anyway is the key for the gold. And I'd be real surprised if we made new highs in the yuan. I'd be very interested to see how well gold is holding up. There are some people that are long-term bullish in gold that have a little different view. And Carter Worth was on Fast Money, very bullish gold. But these guys are bullish gold long-term, and they're not as extreme as Henrik, who's looking for under 1,000. But there is they call it some type of triangle, A, B, C, D, E, which means that you can have a pullback. And I think Greg had talked about a high here and a pullback to 1220 for another triangle, and then we go again. My buddy Jim Welsh, who I've interviewed a few times, and he was long here, took heat, but anyway, he made money, is talking about even 1200. So we'll see. And Scott, if they take out 1280, 1275, I'd say that's becoming more likely. Is it going to just turn into a runaway and blow off to the upside and break out over 1360? Hey, anything can happen. But anyway, I want to present some counter views that aren't, as extreme on the downside as Henrik, and allow for a pretty good shakeout in gold to set up, a huge buying opportunity without gold taking out the 1160 level. So we just correct this, this has been, 1160, and say we get to 1330. That'd be 170. So, yeah, $100 back, 61.8, give you about 12, 25 or so. And then you're wrong under here. And then you get 1.618 of this from here, and that's your $1,500 goal. So, I just want to put it out there and as a possibility, and I think Scott has a pretty good line in the sand for the bull case, but I think we're at least going to pull back to that, test that out. Yeah, I think your theory, your line in the sand will be tested out. But silver looks weaker. Okay. I mean, look at the weekly, look at the close on the week, mid-range, right? So, and back to, all of this resistance. Gold took out, gold failed at 78.6 right here. I was pointing it out. Gold. This was 78.6 right here when it got through that line. All right, let me see it better. 78.6. Okay, so it's a good area for it to peak. So 78.6 in gold and silver, just a little bit above 61.8. So even on the advanced, gold was stronger, right? It retraced more of the move. So I think silver gives up more than gold on a percentage basis. Okay, everyone clear on the metals?
Perfect.
Yeah.
Okay, everyone clear on the dollar and currencies? The euro, the pound. I think the pound will succumb to this too. I think the Aussie has potential to pull back to here. Maybe even all the way back to here. A couple hundred pips. Back to old support that got taken out on the flash crash. Maybe we come back and test this. That's a pretty good trade. Kiwi was stronger on the upside, but it put in a pretty ugly day. I'm not sure about. I don't think we're going to take out these highs again in Kiwi. This was a pretty nice divergence on the 1 hour up here. So many pops in Kiwi and Aussie. And if they go for one more high, it's not a catastrophe anyway. It's only 940. It's 50 pips from here. So if you sell one even here, and you want to see if there's another divergence, another 20 pips above the high, you sell another one up there. As long as the dollar structure and everything is still holding together. So I think I've covered everything. I think this is a give back month, and strategically we should be looking to sell rallies across the board probably for the next month or so.
Can you look at volatility?
Sure.
What are you thinking there, Paul?
Yeah, I know what you're thinking.
I was reading about some manipulation of, some company was just sanctioned for manipulating
Vic?
the XXB.
Uh-huh.
And, you look at other stuff on Twitter and people talk about how
Maybe the Fed plays with it.
Right, exactly.
Because they know it's probably easier to control the VIX than it is to control the gold market now. They used to try, mainly direct, with all the paper selling of precious metals. So, if they want to keep the market up, I guess this would be a good one to manipulate. I'm seeing all kinds of divergences here, but you know what? If that happens to be true, what do you even need the VIX for? To trade.
We can short it.
Yeah, but what do you need it for? I mean, it's really a barometer. I don't even know why. I got, hooked into trading. I traded it. I mean, why not just buy something that's less manipulated, like bearish ETFs, right? I mean, they're all in the zone, and they might even get cheaper early in the week. But this one I was early on, and I thought I was smart to get out. But SQQ had kind of an inside day. Maybe we'll get 88.6 back here. The banks, this is a decent shot. I think the banks are a decent shot. TZA, I think I have it here somewhere. And then I'll cover the bonds, and I think
that's TZA. It was at the top there.
TZA?
TZA would be past it. Holy cow.
So the Russell. So it's actually the strongest so far. I mean, most of these are already under their 78.6 retrade. And I'm not talking about new highs anymore, guys. So on these ETFs, look for retracements. So wherever the low comes in, so you don't look for this kind of move anymore. But maybe you get something like this, and you get a 50% correction from, 1868, maybe back to 13, 14. It's still 30-40% if you time a correction correctly, right? So I'm not looking for new highs. Okay, and I think they're better. It's just a trade, but nothing wrong with pulling 3-4 points out of these bearish ETFs in a month. Pretty good return. So that's what I would do with stock. Maybe I'll try and time anyone trading mini S&Ps here? Okay.
Sometimes.
Okay, well, if I see a setup to do something like on a turnaround Tuesday or something, I'll put out like some numbers on that. And I guess the last thing to cover is yields. So Blake was talking about them. And I said, hey, no, he wasn't talking about it. I said, Blake, what do you think of yield on Friday? And, I think it was bearish US dollar again. I said, well, it looks to me like they're putting in a higher low. And I think that we're going back to 290. And that kind of makes sense looking for a higher yen. And then, so I'll do this and then I'll do the yen. So here's your 10-year. Looks pretty good. I'm looking for 290. So everyone thinks it's going to be risk on, but maybe the market doesn't like it. Anyway, this makes sense for a stronger dollar, doesn't it? Yields heading back up.
Yeah.
The yen plunged on this in the bonds. I mean, this was, the Fed, right? So the dollar and the bonds are making higher highs. I know some people are saying this is a major low. I don't think so. I think we could rally up to here and then take out 250 and head much lower. The weekly, 230. I know some people are looking for this in the bonds. So right now I wouldn't be short bonds. I'd be looking to, be long TBT, not TLT. At least till the 290 yield. I think we're going to get it. And that the bonds and the yen have been more correlated than the yen. The yen tanked and the market exploded on the Fed, right? So normally, a lot of people look at US dollar yen as being a risk on, risk off. Well, I mean, it certainly wasn't that on the Fed. So this was the Fed, right? And the market went up. And now here's the yen recovering with the bonds. So when I look at this setup right here, just the recent range in the yen, I basically have a range, let's call it, 108 to 110. It's going to give us 112. And I know guys talking 120, okay, new highs, or a challenge of the old highs. Like we're up here. So here's 112. And, if we break through there, then we're going to go for the, these highs. So anyway, I'm constructive on the yen, especially when yields are heading up. We'll see if they separate after that. But so I don't want to be, like I was saying, I don't want to be short the. I went home with a small position in Kiwi yen. I just probably look to blow out of it and not be tricky and just look for straight dollar longs and majors, just short the majors. I don't have to be cute with anything. So short euro, short Aussie. Okay.
Good.
I have one yen joke. I ever tell you guys the yen joke? As long as we're on this chart, huh?
Go for it.
Nope.
No, you never heard it. All right. So this Japanese businessman had to convert his yen. He'd fly over in the old days to New York Commerce Bank, and I don't know how many million yen he brought with him to convert to dollars, and he converted, and he goes, "Oh, how come it's only that much?" And the banker goes, "Well, there's a lot of volatility in foreign exchange. The markets fluctuate a lot." So he went home and came back again and got even less. And he goes, "What is going on?" And the banker goes, "Well, there's a lot of, movement in the foreign exchange market and major fluctuations." He came back the third time, and the guy gave him the amount, and the Japanese guy said, "Don't tell me. I fluctuated again." Huh? That's it. I hope no one takes offense to it, but I think it's pretty funny. It's a good
Sounded pretty clean to me.
Isn't it a good currency joke? All right. Anyway, so we'll end it on that currency joke, and let's have a good February and take advantage of some of the air coming out of these balloons.
And shoot me a link to this so I can review it again.
Okay.
Yeah,
Carlo?
please, we do that.
Huh?
Yeah, I'm learning as we go.
Okay. All right. So Scott,
Nice to have you, by the way, Carl.
send me an email. Send me an
Thank
email with
you.
the Dropbox again, Scott. I'll render it and I'll get it out to you later. Do you want it to, Carlo?
Yeah, please.
Okay. You have my
Please,
email. You have my email address, right?
I've got it.
Okay.
Yeah,
And you have a
I've got
Dropbox account?
Yes.
Okay. So
Yes.
send me an email with your Dropbox thing that I just click, and then I go to my folder because you saw me with Skype this morning. That's how I am with everything. Okay.
100%, no problem.
Just Dale the dinosaur. Okay, I admit it, Dale the dinosaur. I was
By
dragged.
no means are you technologically challenged, Dale.
I am, and Blake, they all make fun
You're
of me.
not.
Yeah. Okay, I'm not. All right. Well, have a good weekend, everyone, and I have conviction. Let's see if the market puts a dunce cap on me by the middle of the week, but. Those are my thoughts, and I'm sticking to them until the market proves me wrong.
Right.
Okay,
Thanks,
so
Dale.
yeah, and you guys go into every trade with that mentality because sometimes I'm weak when I'm trading, but here's the mentality you need, Mr. Market. I've done my work. I know why I'm doing the trade. I know where I'm wrong. I know what I'm looking for. Okay, Mr. Market, prove me wrong. Challenge the market. Don't make the markets challenging. Okay, you got to be a warrior because if you're not steadfast and you don't have a plan, you see, you'll get shaken out of trades. So anyway, that's the right mentality for trading, in my opinion. Do what I say, not what I do. Everyone raise their right hand. I will do what Dale says, not what he does. Say it. All right.
I will do what Dale says and not what he does.
Yes.
All right, guys. Ken, you doing okay, buddy? Were you here today?
I'm fine, Coach. Thank you.
Okay.
Yeah.
All right, guys. So have a great weekend, and I'll see you in the arena.
Okay. Thank
All
you.
right.
So,
Be well.
All right. Adios.
Enjoy.
See you
Bye-bye.
guys. Bye-bye.